Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is August 7th, 2025, and we're diving into Warner Bros. Discovery's latest earnings report for the second quarter of 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Warner Bros. Discovery has had an interesting quarter, and I'm excited to break down the numbers and insights from their latest earnings report.
Revenue and profitability overview. Let's start with the top line. Warner Bros. Discovery reported total revenues of $9.8 billion for Q2 2025, which is a modest increase from the previous year. John, can you elaborate on the revenue and profitability aspects?
Absolutely. The revenue growth was primarily driven by a 16% increase in content revenues thanks to stronger box office performances. Net income was a significant $1.6 billion, a stark contrast to the $9.986 billion loss in the same quarter last year. Adjusted EBITDA also saw a 9% increase to $2 billion, indicating improved operational efficiencies, particularly in the streaming and studio segments.
And what about their cash flow situation?
Free cash flow was $0.7 billion, down from $0.976 billion last year, mainly due to higher cash taxes and unfavorable working capital timing. However, the company managed to reduce its gross debt by $2.7 billion, which is a positive sign for their financial health.
Segment performance analysis. John, let's delve into the performance of Warner Bros. Discovery's segments. How did the streaming, studios, and global linear networks fare this quarter?
The streaming segment reported revenues of $2.8 billion, a 9% increase, driven by subscriber growth and new distribution deals. They now have 125.7 million global streaming subscribers. The studio segment saw a remarkable 55% revenue increase to $3.8 billion, thanks to successful theatrical releases like a Minecraft movie. However, the global linear network segment experienced a 9% revenue decline to $4.8 billion, primarily due to domestic audience declines and the absence of major sporting events like the NCAA March Madness.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 14 cents for Warner Bros. Discovery, but the company reported an actual EPS of 63 cents. John, what does this tell us about the company's performance?
This is a significant beat against the forecasted EPS. The positive EPS of 63 cents, compared to the expected loss, highlights Warner Bros. Discovery's strong operational performance and effective cost management. It reflects their ability to navigate challenges in the media landscape and capitalize on their content and streaming strategies.
Debt management and strategic initiatives. Debt management has been a focus for Warner Bros. Discovery. Can you tell us more about their strategic initiatives in this area?
Certainly. The company successfully reduced its gross debt by $2.7 billion this quarter, bringing their cash on hand to $4.9 billion and net leverage to 3.3x. They utilized a $17 billion bridge facility to repay a $1.5 billion term loan and other debts. This strategic move not only strengthens their balance sheet, but also positions them well for future investments and growth opportunities.
Operational efficiencies and future outlook. John, operational efficiencies seem to be a theme this quarter. How has Warner Bros. Discovery managed to improve in this area, and what does the future hold for them?
The company has made significant strides in reducing costs, with a 10% decrease in SG&A expenses and a 6% reduction in the cost of revenues. These efficiencies are largely due to lower marketing costs and optimized content spending. Looking ahead, Warner Bros. Discovery is well positioned to leverage its strong content portfolio and expand its streaming services, which bodes well for future growth.
Key takeaways. In summary, Warner Bros. Discovery has delivered a strong performance this quarter, with impressive revenue growth, a significant EPS beat, and effective debt management. Their strategic focus on streaming and content is paying off, and they are well positioned for future success. Thank you for joining us, John.
Thank you for having me. It's been a pleasure discussing Warner Bros. Discovery's performance.
Thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial insights. We'd love to hear your thoughts on Warner Bros. Discovery's performance in the comments below. Until next time.